Devin, just in case there is that dip that comes into ITC today on account of this news flow, what do you think investors should do?
Well, good morning. I believe that I think this is an opportunity, even if I think if the dip comes, because the fundamentals of the company they don't change enough as far as I think the outlook is concerned. In my viewpoint, I think each of the verticals of ITC they remain relatively stronger proposition like hereafter as well. See the hotel business is definitely getting demerged and it is going to create the value accretion in the books of ITC as well. Similarly, the FMCG business is also moving in that direction, and so the agri business. So, in my viewpoint, I think each of the business vertical of ITC they are showing distinct signs of growth. Given that choice, I would think that I think any correction in the price would be a good opportunity to buy the stock into the portfolio.
It's there. Shifting focus to some of the other buzzers in the in the news of late, Devin, what do you make of the metals pack? I mean, lot seems to be positive for the steel industry, and there is that increased clamor around the anti-dumping which should be there. Is it a good time to buy any of these stocks, or just stay away because there's just too much to track when it comes to metals in terms of the global context?
Yes, I do agree that I think there are too many variables I think which affects the fortune of the metal commodity particularly. However, in the given context, I think two or three positives that I see. On the first, I think the energy prices are remaining under control. At the same time, I think most of the companies are also bringing in the energy mix in form of renewables, so which is bringing down their per unit consumption cost for sure. 50% and above kind of a component in the production of metal is coming out from energy. And when the energy is coming down, cost is coming down. Certainly, I think on that front, the margin front, the business suddenly starts looking better. And this is a journey which is not going to be 1 year, 2 years. This is a journey which we are likely to see next 5 to 10 years. So that's where probably I think metal remains strongly placed as far as the margin outlook is concerned. On the other side, the demand outlook remains absolutely strong and convincing. India as a whole is basically expanding into the capex, and probably 2030 visibility is in front of us with the government budget for infrastructure spending. In my viewpoint, I think that's where the demand generation is going to be remaining stronger for ferrous, non-ferrous, both commodities. So from that point of view, it is important. One possibility which one would like to count, uh, the war-related situation is gradually coming under control, and should it result into some kind of calm down, after the destruction, the construction will take place in those countries, and that's where probably once again the demand for metal in the global market will start improving. And last but not the least, I think the logistic-related problem due to war-related situation, if they overcome that particular situation as well, then overall, I think the outlook for metal commodity remains relatively more sharp, and that is where I think in the near term you may not get complete visibility of all this. But I believe that I think it's a structural change which is happening in metal. So one will remain bullish on the prospects of metal commodities going forward.
Okay, bullish on the metal commodities. But Devin, I also wanted a better sense regarding retail. We all know how the urban consumption was doing well, at least the upper end of things. But now it looks like there is going to be some more GST which might be there, or levies might be there on the upper end of the consumption basket. Luxury goods and even ready-made garments apparently from 1500 to 10,000 rupees are expected to get a higher levy. Do you think the likes of a Shopper Stop or a Aditya Birla Fashion Retail, or even Trend for that matter, might see a bit of a impact of this news flow? Or do you think that the story about the urban consumption ramping up is something which is very secular in nature?
Well, I guess I think the consumption shouldn't be doubted. On the one side, I think we are always finding that I think when would the consumption return in the urban market. On the other side, I think the important point which is forgotten that on the EMI cost I think has to come down. And there is a clear buzz at this point of time that the RBI would probably move in the direction of bringing down the cost of funds. Should the cost of fund comes down, consumption part of the activity increases, and that's where I think you're likely to see the equation changing. I would remain bullish on possibility of increase in the consumption, largely because of the fact that the per capita income in the country is increasing. And because of that element, I believe that overall consumption in the retail space would favor some of the strong retailers who are having particularly on ground as well as the digital presence. Once this omni-channel platform, I think one can possibly talk about. they would probably be the relatively better choice. And I think at this point of time, the ONDC network has still not completely integrated into most of the merchants and most of the corporates who are producing the goods and services. Once the ONDC network gets integrated, in my viewpoint, I think retail will remain a significantly strong proposition from the investor's point of view as well as the consumer point of view. Yeah.
Adani stocks, they fell and they've recovered. Now is it time to move on? Can we ignore the news and just move on?
Yeah, Nikunj, I think from the day one have been maintaining a viewpoint that fundamentals do not change because of whatever the allegations have come up from the Department of Justice in US court. In my viewpoint, I think the fundamental remains absolutely strong. With 85,000 crore EBITDA and growing at the rate of 20% per annum on a 240,000 crore debt, I think the balance sheet of the group itself, I think, is very, very solid with the cash flow generation that they have. And in my viewpoint, I think each of the assets which they have, be it in power generation, power distribution, or for that matter, road asset, airport asset, even data centers, port, each of these assets that this group has got, they all have significantly large amount of growth prospects going ahead. The capacity that they have built and the kind of cash flow that they're deploying back into the business, they all both, I think, work well. Maybe to a certain extent, I think they'll calibrate the kind of growth proposition that they are up till now having. They may probably, I think, use the free cash flows for probably creating the further growth or the future growth in these particular businesses. That would be even better. So, from a perspective of looking at these companies within this group, I consider that if stock fall in the stock prices, definitely I think a buy opportunity from investment perspective.
7% higher for the small cap index. Who would have thought that this kind of a comeback which would come? Deven bhai, where is this long live China trade? Everybody said, "Arey, China, China, long live China, China is cheap, let's go back. India is expensive, we will come back, but right now we want to go to China." That long live China trade has lasted only for 3 weeks.
So I think on one side, definitely it is surprising, but if you go internally into China, probably you find that significant amount of progress has been made by this country in the area of renewables. They are probably, I think, talking about, I think, significantly cheaper cost of power for their production units. So at some point of time, if somebody is taking a long-term view on this particular country and the businesses therein, I think one would try to ask the question that whether do we have a similar comparable available in any other part of the world, wherein you have a cheaper cost of power because of the renewables that you are bringing in, wherein you have got a significantly large amount of computing which is taking place because of the niche production that these people are carrying out. In any other part of the world, I think do you have the same proposition? The answer is no. So obviously, as an analyst, suppose if I'm looking at the global market, I would tend to look at China more favorably. But somehow or other, I think that conviction is not simply happening, that I think full of money can be deployed into China and probably get the return out of it. Even though valuation wise, I think as a whole, Chinese market remains comparatively cheaper. Not too sure, I think, why it is because we don't operate that market. But we believe that I think India as a country is offering relatively, I think, more stable condition from the perspective of seeing the growth of next 5 to 10 years. We are deploying systematically money in the new industry, including renewables. We are deploying money into the fab that is semiconductors, and we are also deploying money in significant amount of AI-based applications, which are likely to change the way of computing, the way in which I think the results are being obtained in different industries. So all in all, put together, the confidence level for India remains relatively higher, and that's where I think even though slightly premium, we are traded better compared to China, as I understand.
Even Swiggy is going to report its numbers the first post the listing. What is the expectation, given that the race really seems to be about the quick commerce platforms?
So I feel that I think in the quick commerce platform, I think the completely the players are playing their cards well. In my viewpoint, I think the consumer tech part is being played so very well with Swiggy and Zomato both by way of different consumer hooks that they have created, as I call them as. Vertical wise, I think from food delivery to dining out to entertainment, and I think the quick commerce, each of the verticals I think these companies are creating they are relatively remaining a short proposition, strong proposition, generating significantly large amount of business opportunity for themselves. The bigger challenge for people like us, I think, want to invest in this business, we find that the valuation wise, they are not cheap. Probably everything is priced in as far as I think the investment argument is concerned. Whether you talk about Zomato or you talk about Swiggy, everything is priced in. And we do not know how Reliance is positioning itself in quick commerce space, I think, through Reliance Retail. They are probably, I think, trying their work on the GeoMart side. But so far, I think we don't have the complete clarity on that aspect. They enter obviously late in any other business if you look at it. And once they enter, I think they disrupt the market. So that is one area where I'm not very sure for Zomato and Swiggy that if the likes of Reliance enters into and disrupt the market, whether this premium valuation will be justified on that day. So that's the reason for which I think though we like the business, we don't get into it due to the risk involved in the valuations.
Okay, point taken. What's the view on the power sector right now, Deven? I mean, Torrent Power's QIP is supposedly getting good traction amongst investors. Any stock within the space that you're specifically watching out for?
Not really at this point of time. I think though we continue to hold position in Tata Power and we continue to like that company also from the point of view that a significantly large amount of emphasis is going in the area of renewables. And that's where we get relatively more confident about. But honestly speaking, beyond that, we don't have other companies to talk about in our portfolio at this point of time.
Deven, great to have you on the show. We'll let you go on that note. As always, thanks for taking time out.
If you like this video, then like, share and subscribe to ET Now.